Hi everyone, it's Chat with another video. Today I'm going to be doing another 5-minute stock analysis, this time on Unity, the game engine manufacturer. Very interesting company, huge total addressable market, predicted to be over $50 billion and growing at 10% compound annual growth rate a year. After a drop of 43% from all-time highs, company is currently a $33 billion company with a price sales of 26. I want to just try and figure out if it's investable at these sort of prices. As I mentioned, Unity is most well known for the Unity game engine that is the most popular in the world. Around 50% of all video games are made using Unity. Unity's platform provides software solutions to produce 2D and 3D content for phones, tablets, PCs, consoles, VR devices, and in the future maybe augmented reality devices. It's the world leading platform for creating and operating interactive real-time 3D content. Unity is obviously a huge name in the video game industry. Example of a game made not so long ago with it is Among Us, very popular with indie developers and also has a 50% market share in game engine use. It has a wide variety of uses aside from that, a ton of optionality here, and they're only just really moving into these more aggressively, including film and animation industry, architecture and construction, which is some interesting projects there, similar to the way Matterport does things, and heavy industries like manufacturing, automotive, transportation. The uses for Unity are endless, the possibilities are endless, and Unity will surely be a major player in the creation of the Metaverse. Lots of long-term tailwinds here, and you can see why the TAM is so large. So many companies looking to build in the Metaverse recently. I think McDonald's came out, said they were going to create restaurants in the Metaverse. I'm not really sure how that's going to work. Nike creating solutions in the Metaverse. A lot of these will be made using Unity as a platform because it's so good for this type of 3D content. Having a great TAM is wonderful and all, but what you really need to do is deliver on that, and Unity is doing so at the minute. Most recent results were excellent. From the fourth quarter of 2021, revenue up 43% year over year with a dollar-based net expansion rate of 140%. This is a key stat for SaaS or platform as a services companies, meaning on average companies spend 40% more on Unity than they did the last year. This doesn't include churn, so I would prefer to see the company report net dollar retention rate, but it is what it is. This is an absolutely incredible DBNR number. Still loss-making company, of course, but while aiming for revenue growth, so they made a loss of 46% of the revenue, 148 million, but they're spending a lot of money on gaining market share, gaining revenue, so I'm not going to ding them too much for this. The full year numbers were equally impressive and pretty much on par with the most recent quarter. Revenue up 44%, Create Solutions up 41%, Operate Solutions up 51%. They're still making substantial losses, but again, this is kind of par for the course for the high growth market grabbing companies. Not ideal, but to be expected when spending for growth. Loss from operations, 531.7 million, or 48% of revenue. They're now over $1 billion run rate, and this is from early last year. They were 770 million, something like that. Now they're at 1.1 billion. Really impressive growth, and it's just seems like they're accelerating. They're constantly improving on the guidance. Aside from all the excitement around future uses, optionality, enormous TAM, the reason Unity trades at such a premium, was 26 price to sales as we speak now, with 40% revenue growth a year. I mean, 40% is good, but 26 price to sales is pretty rich in my opinion. Is its fantastic margins, 77% GAAP gross margins, 80% non-GAAP, truly impressive, some of the highest you will see, even in this SaaS space. When this company turns profitable, it will be super profitable, and gross margin can really carry a company. This will translate to high net margins eventually, and this is really, really promising in my opinion. Stock-based compensation is not ridiculous or out of hand, which is sometimes a red flag with these type of companies, so I'm really impressed with these numbers. To summarise, I think Unity is a thoroughly investable company. I love it as a business and I love its prospects. I've used the platform myself and I think it's far ahead of the competition. It has really high switching costs, which is of course a moat, and a network effect as the Unity Assets platform has a ton of assets that are added on, kind of like apps that are made by third-party developers. High switching costs as customers will have to replace or retrain developers. High dollar-based net retention rate indicates high switching costs also. Of the top 100 game studios, 94% were Unity customers. 71% of the top 1,000 mobile game developers were also Unity customers. They're the clear market leader here, far ahead of the competition. They have great optionality, barely getting started in some industries, and they're just moving into film, construction, architecture, all sorts of things. That's not to mention the potential rise of the Metaverse as companies like Facebook pour a ton of money into this. And of course, excellent growth numbers with really, really strong gross margins. I think this is a thoroughly investable company. I've previously been a Unity shareholder in the past. I sold not quite at the top, but just off because I wasn't comfortable holding a company with 50-60 price to sales ratio in the current market environment. Now it's took a 43% loss. It's actually down 10% for the year in the past year. It's sitting at price sales around 26, a $30 billion company. I think this has 10x potential over the next 20 or so years. It's a really, really strong company, and I'm more comfortable buying in at these prices. So I'll be buying in and dollar cost averaging over the next few weeks. You should do as you please with this. This is just my opinion. You should do your own research. This is, of course, not financial advice. If you want financial advice, you should speak to a registered financial advisor. I'd like to ask you to like and subscribe to the videos if you're enjoying the content. Thanks. Bye.